In this video, I'm going to show you how to use technical analysis to perfect your entry if you do use fundamental analysis as part of your decision making in investing and trading. I'm Dan Gibby, Managing Director of MasterTrader.com, and I've been trading stocks and options for almost 25 years now. I believe purely in technical analysis to make my decisions with what we call techno-fundamental analysis, which is combining intermarket analysis with market internals. But no, I don't use traditional fundamental analysis of looking at financial statements and crunching numbers like that. In today's Barron's magazine dated September 24, 2018, I like reading it. I read things of interest. Others, I get sometimes trading ideas, and I don't care what the news or what they're really writing about. I just pull up the symbol and see if there's a trading opportunity using our Master Trader approach. This article on page 20, written by Jack Huff, called 5 Stocks to Buy as Bond Yields Rise. And the statement on top of that says, a recent JP Morgan report suggests that investors may want to rotate out of some of their defensive holdings and into capital goods, financials, and automotive. Well, yields have been rising last week with the bonds falling, and that does help interest rate sensitive sectors like banks. And in fact, we have been aggressively trading them for that reason over the last couple of days because the patterns have been bullish breakouts. But let's look at these 5 stocks that they're recommending. It says Barron screened for promising companies in those sectors and found 5 with below average valuations and healthy growth prospects. Now that is purely fundamental analysis, which I have zero desire for. But if somebody wants to use fundamental analysis for a screening tool and then come to the charts to make your buy and sell decisions, then that, I think, is a wonderful combination, and I have no problem with that whatsoever. But I will still trade a bullish pattern on bearish fundamentals and vice versa. I'll short a bearish setup on bullish fundamentals. So that's where I think they can be very misleading. They're kind of rear view mirror looking things, and charts are a reflection of current supply and demand on multiple time frames, and charts don't lie. That's a reflection of real buyers, real sellers, and who is in control of the stock on those time frames. First one here, AMAT. Daily chart on the left, weekly on the right. This has had a very bearish, what we call professional gap breakdown here in mid-August on huge volume, and it's in a downtrend. It's lower lows, lower highs, under the 20, 50, and 200. That's a nasty downtrend. The weekly, nasty downtrend. Look, way back here, you had a lower high, lower low, lower low, lower high, lower high, lower low. I mean, there's absolutely no reason to buy AMAT yet using technical analysis. If you wanted to put it on your radar and watch it, then you would have to just wait for a bullish setup on multiple time frames, but it's not today. BWA, Borg Warner. It's in a trading range after a breakdown on the daily and weekly charts. So it's stabilized on the daily, but it's under its 200. The weekly is in a downtrend, cracked, lower lows, lower highs. There's no compelling reason using technical analysis that I would want to buy this stock. If you did buy it, it would be over this tail here. But then for long-term trades, we want what we refer to as a price void, meaning the weekly and monthly charts have a lot of room to run higher without congestion or resistance to the left. This one has a wall of resistance to the left. This is not a core trade to the Master Trader student and trader. Caterpillar, Now, it's rallied to resistance on the weekly chart. It was a bullish reverse head and shoulders breakout here on this particular day. We were actually selling bull put credit spreads on it in our advisory letters in the green trading room. But now it's up. Look, it's rallied from like 137. It's rallied 20 points to resistance. This is not the time to take a bullish position in Caterpillar using technical analysis. Key bank, banking sector, of course, but it's rallied to resistance. There's no price void. Compare that to the banking ETF, XLF. We are actually long XLF in the Master Trader ETF investor letter. And that's where we're looking for longer term positions. In fact, I'll show you some of those positions in a moment. So this finally broke out and the weekly has room to move higher. So we do like the sector, but not key bank. In fact, this is one that we did sell puts on. USB, a regional bank, broke out last Wednesday also with the sector and has room to run. JP Morgan, room to run. I mean, there's superior choices in the banking sector using technical analysis. Finally, PH, Papa Hotel, Parker Hannafin. You just missed your entry is all. Here was your entry back here. On this ugly gap down bar, we call this a bear gap that bullies. And it's just a cute little name we came up for because it's a very bearish gap that was quickly negated in the first hour of trading. That's bullish. Then you got your 50% pullback into that wide range bar on the 50 period moving average. That's where you get on board this using technical analysis, not now. Look how extended this is. Look at the run from way the heck down here, 153 to 190 and change. That's not a prudent way to get on any of these stocks. Let me show you what Master Trader looks for in the price void of bigger time frames in our core ETF trader. So I'm going to show you every one of our open positions right now. The diamonds, DIA, we bought over this bar as a new trade last week. Weekly and daily breakout. It looks great. ITA, the aerospace and defense sector, we did the same thing. We bought this breakout on the daily, corresponded with a breakout on the weekly, and there's a price void, meaning there's absolutely no resistance to the left. It was in a multi-month wide trading range, and it broke out and gave a beautifully timed entry on both time frames. That is a core long position to us. XLF, as I mentioned, we're in that. We're in XLG, which is light volume, but it's an S&P 500 top 50 stock, and we like this better than the spiders. We entered it way the heck back here on this bar from this breakout, on this engulfing on the weekly chart. We're in a full lot position of this. We're in this at $195. And we're up over $15 already. XLI. We've been in this since August 20 at around 76.45. So it looks like we bought it right in here, and that looks great on the daily and weekly. XPH, the pharmaceuticals, we've been in this since June 25. We bought this breakout here, and we added here. And we actually stopped out of half a position for an 11% gain in 10 weeks, and we're still holding half. The weekly and the monthly still look great. And finally, we're in XTL. We bought this breakout here on the daily, weekly, and monthly chart, and it's kind of just slopping around in a trading range, but it's still fine with a price void above. So I hope that helped. I don't mind people using fundamental or any analysis, but for those who don't believe or know how to read technical analysis, you owe it to yourself as a trader and investor to get the education, because using charts for your timing and trade management is going to drastically increase your success. Check us out, mastertrader.com, our education, our trading advisory letters. We have a free trial to our green trading room. Just go to mastertrader.com/green trial. And don't forget to sign up to our YouTube channel for continuous education on trading and investing in the markets. Good trading all.